In this latest Basics of Forex video, we're going to recap the major currency pairs and we're going to take a look at what are considered the commodity currencies. So keep watching to find out which ones those are. Most of the video we're going to be looking at currency crosses. We'll explain what currency crosses are, which are the major currency crosses, which are the most heavily traded ones. And then we're going to finish off by taking a look at the exotics. And do keep watching to the end of the video to find out which I consider to be one of the most important currency pairs in the exotics. Hello, I'm Peter Martin with Trading 212, and we add educational videos about the financial markets, about trading to YouTube regularly. If you haven't already, make sure you subscribe to our YouTube channel because that's the easiest way to know when we've added a new video. Well, where we're going to pick up in this video is where we left off last time with the major currency pairs. So let's look at those. In the last video, I said these are what I consider to be the majors, but I should point out that there is no definitive list of the major currency pairs. Some people say that there should be a seventh pair on the list, which is the New Zealand dollar against the US dollar. And indeed, as you'll see when we look in Trading 212's app, that this pair is listed there under the majors. The reason I don't include that pair in my list is because its traded volumes aren't actually that high. The turnover in this currency pair is comparable to the US dollar against the Singapore dollar and less than the US dollar against the Mexican peso, for example. But as I say, there's no definitive version. There's never a right or wrong in this. And in fact, some people will group the New Zealand dollar against the US dollar in a separate grouping with Aussie dollar against US dollar and dollar CAD in a group that they call the commodity currency pairs. At the end of the day, it's just a way of grouping them for the sake of convenience. And the reason that these three tend to be called the commodity currencies is that they are significant exporters, and what they do export tends to rely on commodities to a significant degree. If we look at the Australian dollar and Australia's economy, its major exports include iron ore, coal briquettes, gold and gas. If we look at the Canadian dollar and Canada, major exports are mineral fuels. A major part of that is oil, but also coal. And then New Zealand, the New Zealand dollar, major exports are dairy and also meat and wood. And if you want to learn more about the major currencies as well as the major currency pairs, do check out that previous video. In that video, we mentioned that all the major currency pairs involve the US dollar. But what if we want to trade a Forex pair that involves two major currencies without involving the US dollar? Well, these are what's known as major currency crosses, and they're sometimes also called minor pairs or just minors in pointed contrast to the majors. So let's take a closer look at this now. So here we are in Trading 212's web app looking at Eurodollar, one of the major pairs. What I'm going to do is just go up to the top here and click in this magnifying glass icon box, which is a search box, and we get a list of all instruments. On the left, we can see though that we have stocks, indices, cryptocurrencies. So we click on currencies, then we have these three groupings: major, minor, exotic. If we click on major, now those are the major currencies that we've just been talking about, and you can see included in there is New Zealand dollar against US dollar. If we click on minor, then we're going to see our currency crosses. And there's a long list of currencies in there. So let's now talk about the most important of these. And these are the three most traded major currency crosses, or minor pairs, whatever you want to call them. The euro against the pound, euro against the Japanese yen, and the euro against the Swiss franc. And we can see the importance of the euro as a traded currency in its involvement in all three of these most traded currency crosses. Here we have three sample quotes for those crosses. And let's start by looking at the euro against the Japanese yen. Now this is quoted in a similar way to the way that dollar yen is quoted, which we looked at in a previous video, which is to say that 1 pip is 0.01. 1 pip is on the second decimal place if this offer here was to increase from 117.963 to 117.973, that would be an increase of 1 pip. With Euro Swiss and Euro Sterling, 1 pip is, as it is with so many other currency pairs, it's 0.0001. So it's on the 4th decimal place. This offer here was to increase from 1.08584 to 1.08594. That would be an increase of 1 pip. And similarly with Euro Sterling, as we said, it's the 4th decimal place. And if that offer was to increase from 0.91248 to 0.91258, that would be an increase of 1 pip. And then for all 3 of these, your quantity, if you're placing a trade, would be expressed in euros, because euro is the first name currency for all 3 pairs. So those are the 3 most traded major currency crosses, but a cross can include any 2 currencies that doesn't involve the US dollar. Let's now take a closer look at this and explain where the term cross comes from. A currency cross is any pair that does not involve the US dollar. The term currency cross stems, as with many aspects of the Forex market, from the conventions of the market and from the importance of the US dollar as a vehicle for foreign exchange transactions. The dominance of the US dollar in this way meant that historically in the interbank market, that if an institution, say, wanted to convert, for example, British pounds into Swiss francs, then that conversion would actually comprise 2 legs. So the first leg would be to convert the sterling into US dollars first of all, and then you would convert those US dollars into Swiss francs. So let's run through some sample numbers. These are just single exchange rates rather than bids and offers, just for simplicity's sake. But let's say cable is at 1.2129 and dollar Swiss is 0.9793. If we multiply these 2 numbers together, we arrive at 1.1878, which is our rate for sterling Swiss. Now, as I said, you don't need to worry about any of this with trading 212, because you can just deal this cross directly as a single pair. But it is quite interesting to know, and this derivation from 2 dollar involving pairs is the reason why the cross tends to have a larger spread, and that's true across the Forex market as a whole, no matter who you're dealing with. When we looked in the web app earlier, we saw that all the Forex pairs were divided up into 3 groupings. We had the majors, the minors, and the exotics. So let's finish off now by looking at the exotics. Here we are back in Trading 212's web app in the instrument search, and this time I've selected exotic currencies here, and we can see there is a long list of currency pairs that are available to trade in here. One of the more important ones is the dollar against the Mexican peso, so let's just talk about that one quickly. So the exotic Forex pair we're going to focus on is the US dollar against the Mexican peso. As I said earlier, groupings are often more for convenience's sake than anything else. There isn't really a strict definition of an exotic. I myself would tend to lean towards saying an exotic Forex pair involves an emerging market currency. In this case, that's the Mexican peso, the 3-letter ISO code of which is MXN. As you can see from this sample quote here, the exchange rate is quite different to the ones we've looked at so far in terms of the size of the number of how many there are of the quote currency to the base currency. But 1 pip here is the 4th decimal place, which is actually the same as many currency pairs that we've looked at. So if this offer quote was to go from 19.7037 to 19.7038, that's an increase of 1 pip. Also note there are no fractional pips. There's no little number up here, so there's no fractional pips. And you'll also notice that the bid-offer spread is much wider than we've seen for the major currency pairs, where those bid-offer spreads are razor narrow. Now, the reason I rate the US dollar against the Mexican peso as so important is down to the high volumes that are traded for this Forex pair in the Forex market. It sees more turnover than major crosses such as Euro-Yen and has more than 50% of the volume of Dollar Swiss, which is a major currency pair. I hope you enjoyed this look at commodity currencies, currency crosses, the exotics. If you did, please hit the thumbs up button and give us a like. Or why not share your thoughts with us in the comment section? We do read every message we receive there. But that's all for now from me, Peter Martin, and Trading 212. Thanks for watching. I'll see you next time. Goodbye.